Happy Wednesday, everyone. It is the 3rd of February, 2021, 1:16 p.m. Eastern Standard Time. Time of the day when the market kind of just drags on a little bit, gets a little bit more boring and sideways, or just kind of sticks with low volatility, omnidirectional moves. I want to take a look at two pairs today, the Euro Aussie and the Euro Yen. I had forgotten that we did talk about this sell stop idea, but I don't remember when that was. This last week, maybe? But that sell stop has worked out really nicely. I don't quite remember what what day that was on, but hopefully some people made some moves on this. It's down about 120 pips from our original sell stop idea. The Euro Aussie. Now, a couple things I want to look at here. First, I want to look at the 3-week chart. So on the 3-week chart, taking a look at the RSI, it's flattened out. Now, generally, when I see something inside the cloud on my highest time frame, which is what my 3-week chart is, I tend to ignore it, mostly because that's the rules I follow with the Ichimoku. However, day trading wise, that's what I do. But when we're talking about these long-term charts, I'm a little bit more lax on it. What I do want to point out, though, is that we are at these pretty deep lows in the RSI. That doesn't mean it can't go lower. In fact, it could certainly dip further south, and we could see a flash crash of the Euro Aussie very easily if the %B dips below 0.2. But it doesn't seem very likely because of where we are at with the RSI and the 3-week chart, and then where the composite index is at on the composite index. The red line is the CI line, the composite index line. That is at a pretty normal area that we've seen prices bounce. There's not any bullish divergence that exists between these two indicators. We're just looking at these extreme lows. Now, let's go take a look at the weekly chart. A little bit different scenario here. So we had last week and the week before, pretty nice big bounce, nice little relief rally there. The %B is still below 0.2. The RSI has bounced and it's sloping down, but this is the one that I think is the most important out of the bunch. So the composite index right here, this is what we want to look at. We want to look at if the CI crosses above the slow moving average on the weekly chart, because that will confirm, at least for a short period of time, a strong corrective move, and that corrective move may be prolonged. So watch out for that. We have some pretty normal resistance that we see up here. It's getting harder and harder to move up higher as we get closer to that weekly Tenkan-sen. But we are filling in some pretty good volume over here. I think we are. Let's just look at the last weeks here since we fell down lower. There is a pretty significant gap between 58.31 and 61 even. So there's a pretty good gap in between those prices. So if it were to move higher, that should move up higher fairly quickly and easily. So that's on the weekly chart. On the daily chart, we have what looks like it could really push down further south. I've mentioned this before, but when you're looking at your oscillators, really you should, and I'm not really practicing what I preach, but when I do these sessions, but renew my license early. No, thank you. What you should do is take a look at your oscillators, whether you're using the RSI, the Awesome Oscillator, the Kaufman 4, whatever. just draw trend lines like you would normally on your price chart, your candlestick charts. Because you're going to spot things that are important and relevant and that are going to give you kind of a heads up to what may be happening. So, for instance, this move right here, we could consider that a rising wedge. That move right there. And then we have an ABC corrective wave down. So I mean, you can be a little bit more flexible with your rules. But there's a trend line in the RSI that we're right up against now, that if we were to cross down below, it would just trigger further downside pressure. This is a very likely scenario too, because we see the composite index has crossed below the fast average. So there's a lot of things there indicating that we could see some continued short-term selling. Watch though for higher prices. The trade here to go long on the Euro Aussie, I would definitely wait until the lagging span is above the candlesticks. So if it's not by tomorrow, if we don't get a close above the candle there, then we look for about 100 or 80 pips lower is where we'd want it. I'd wait for a close above the Kijun-sen, and then for the lagging span to get above the price action, above the candlesticks. That'd be what I'd be looking for. That is what I'm looking for. Let's take a look at the Euro Yen. We looked at this the other day. Gosh, look at look at that 3-week chart. Look at the candlesticks of the current 3-week, and then look back. There's 3, 6, 9, 12 weeks so far. The 15th of February is when the next 3-week candle pops. We've got that rising wedge. Just not a lot of follow through in there. We have the weekly chart here. And on the daily chart, so on the 3-week chart, we see the composite index has crossed down below. We're in these elevated conditions on the, well, not really elevated for what the RSI looks like here, but otherwise it's actually sitting pretty neutral. And then we have on the weekly chart, we have the composite index has dropped below both of its averages. But we're still finding some support at 55 with the RSI. That's pretty telling. But as we look at the daily chart, I mean, there's a lot of stuff here that looks pretty bearish in the short term. I'm gonna get a linear regression channel in here because that kind of smooths out the move. Yeah, that doesn't look very healthy. Let's not use that high though. Let's use over here. Yeah, same story. If we're gonna use, oh no, that's gonna bring it all the way over there. Yeah, so no matter which way you look at it, it looks very much like you could see some further downside pressure with the Euro Yen. The daily chart right here, this composite index. This is one of my favorite things to notice on a chart. I call this the pinch because it's like all three of them are getting pinched. And the composite index, when you see it cross below the fast and the slow average at the same time, really close together like this, that is usually something that precedes a very, very, very big drop, especially if it crosses down. If it crosses up, it's the opposite. So we could see a really, 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 really big drop on the daily chart, certainly between now and Friday, the close on Friday. Just watch out for that. This does not look very supportive at all. In addition, we've had the RSI trade up. It's in a bear flag, and it's really struggling to hold it. and we could see a really, really, really deep drop here. Literally any minute, we could see this just get hammered south very, very quickly. This is on all the Forex pairs that I trade. This is the one that I think has the best risk to reward ratio. There's not a lot, for me at least, there's not a lot of risk here. You can risk 200 pips to collect 600 on a drop here. It's a very, very nice setup, and hopefully we'll get some follow through. But otherwise, I mean, this is a squeeze of squeezes. Just reference back to our 3-week candlesticks. I mean, that is very, very, very constricted. That's nuts. But anyways, that does it for me. Y'all have a great rest of your trade day. Take care of yourselves, and I look forward to speaking with you all in our future videos. Don't forget to like and subscribe. Thank you.